Here's something most people over 60 have never heard of. Your bank can legally freeze your account. Not because you did anything wrong, not because of a crime, just because of your age, and a phone call your bank decides looks unusual. Sounds strange, right? But it's real, and it's becoming more common every year. Here's why this matters. Millions of people are getting closer to retirement age, and most of them have no idea this rule even exists until it happens to them. In this video, we're breaking down exactly what's going on, why banks are doing this, and most importantly, how you can protect yourself before it ever becomes a problem. This isn't about fear. This isn't some hidden agenda. It's about understanding a financial system that's changing and making sure you're not caught off guard. Let's start with the basics. So, what exactly is happening? Over the last several years, banks and financial institutions have been given new powers and, in some cases, new legal responsibilities to flag and temporarily freeze transactions involving people over the age of 65. Now, this is where things get interesting. This isn't some random bank policy. It's tied to laws designed to fight elder financial fraud. In the US, for example, there's something called the Senior Safe Act. There are also rules from FINRA, the organization that oversees brokerage firms, that allow banks to place a temporary hold on a transaction if they suspect financial exploitation. Here's why this matters. Elder fraud is a massive problem. We're talking billions of dollars lost every single year to scammers, fake tech support calls, romance scams, and family members taking advantage of aging relatives. So lawmakers and regulators said, okay, banks need a tool to step in, and that tool is a temporary freeze. What this really means is, if your bank notices a transaction that looks out of pattern for you, a large wire transfer, a sudden withdrawal, money going to a new account you've never used before, they can pause it, sometimes for a few days, sometimes longer. Now let's talk about why this is happening more and more. Point 1. The rise of digital banking has made fraud faster and harder to reverse. In the past, if someone wanted to scam an elderly person, it usually involved checks, in-person visits, maybe a wire transfer that took days to process. There was time for someone to notice, here's why this matters. Today, money can move in seconds. A scammer can convince someone to send money through an app and it's gone instantly and often impossible to get back. So banks had to adapt, and one of the ways they adapted was by adding extra scrutiny to accounts belonging to older customers, especially when there's a sudden, large, or unusual transaction. Real-world example. Let's say someone receives a call claiming to be from Medicare or the Social Security Administration, saying there's a problem with their account, and they need to transfer funds to a secure account immediately. If that person, who's 70 years old, suddenly tries to wire several $1,000s to an account they've never used before, the bank's fraud detection system may flag it. The transaction gets paused. Someone from the bank may call to verify it's really them and that it's really what they want to do. Now, here's the part most people don't expect. Even if it is legitimate, even if you're just sending money to your grandchild for college or making a large purchase, the system might still flag it. Because to an algorithm, it just looks unusual. What this really means is you could be doing something completely normal and still get a temporary hold on your funds. Let's move to point 2. Banks are using AI and behavioral analysis more than ever before. This is a big shift. Banks used to rely mostly on simple rules, like flag any transaction over $10,000. Now they're using machine learning systems that study your spending patterns over time, where you usually shop, how much you usually withdraw, what times of day you're typically active. Here's why this matters. When something falls outside that pattern, especially for an account holder over 65, the system can automatically trigger a review. Sometimes that review happens instantly, behind the scenes, and you never even notice, but sometimes it results in a hold on your account or a delay on a transaction until someone confirms it's really you. So this is where things get interesting. This isn't just a US trend either. Banks in Canada, the UK, Australia, and across Europe have been rolling out similar elder protection protocols. It's becoming a global standard in banking. Point 3, joint accounts and trusted contacts are playing a bigger role. Many banks now encourage, or in some cases require, older customers to designate a trusted contact person. This is someone the bank can reach out to if they notice unusual activity on the account. Here's why this matters. If you don't have a trusted contact on file and the bank flags a transaction, the only way to resolve it might be you, personally, going into a branch or spending a long time on the phone verifying your identity. What this really means is the The systems designed to protect you can sometimes create extra friction for you, especially if your information isn't up to date with your bank. Now, let's talk about the part everyone wants to know. How do you avoid getting caught off guard by this? This is where we shift from what's happening to what you can actually do. First, update your contact information with your bank. This sounds basic, but it's huge. If your bank can't reach you quickly to verify a transaction, that hold could last a lot longer than it needs to. Here's why this matters. A 5-minute phone call to confirm, yes, that's me, that's a real transaction, can be the difference between an instant resolution and your money being tied up for days. Second, set up a trusted contact person if your bank offers it. This is someone who isn't on your account, who can't access your money, but who the bank can call if they're worried about unusual activity. It's an extra layer of protection for you, not against you. Third, if you're planning a large transaction, especially something out of your normal pattern, a big transfer, sending money overseas, opening a new account and moving funds into it, call your bank ahead of time. What this really means is a quick heads up to your bank can prevent an automatic flag altogether. You're essentially telling the system, this is expected, this is normal, don't worry about this one. Fourth, know your rights. In most cases, banks can only place a temporary hold, usually a set number of business days, and they're required to investigate during that time. They can't just freeze your account indefinitely without cause. Here's why this matters. If you ever feel like a hold is lasting too long or you're not getting clear answers, you can ask to speak with a supervisor or even escalate to your country's banking regulator. There are systems in place to make sure these holds don't drag on without explanation. Fifth, and this one's often overlooked, talk to your family. A lot of elder fraud happens because scammers isolate their target. They tell people, don't tell your kids, don't tell the bank, this is private. So this is where things get interesting. By simply having an open conversation with someone you trust about your finances and how your bank handles things, you create a kind of safety net. If something ever does get flagged, you're not navigating it alone. Now, let's bring this all together. Here's what we covered. Banks now have more tools, and in many cases, legal responsibilities, to monitor accounts for people over 65, especially when it comes to unusual or large transactions. This isn't a punishment. It's a response to a real and growing problem, elder financial fraud, which costs billions of dollars every year. What this really means is the same systems that might occasionally pause a legitimate transaction are also the systems that have stopped countless people from losing their life savings to scams. The key takeaway here is simple. Knowledge is your best protection. Update your information. Set up a trusted contact. Give your bank a heads up before big transactions. And keep the people you trust in the loop. Do that, and these systems work for you, quietly in the background, without ever becoming a problem. And that's really the bigger picture here. Banking is changing. Technology is changing. The way institutions protect their customers is evolving fast. Staying informed isn't about fear. It's about staying one step ahead. So when changes like this happen, you're ready for them, not surprised by them. If this gave you a clearer picture of how modern banking actually works, that's exactly the goal. Thanks for watching, and we'll see you in the next one.